Hello everyone, welcome back to our stock market learning channel. Before we start, a small disclaimer. This video is only for educational and learning purposes. I am not a SEBI registered investment advisor, research analyst, or portfolio manager. I do not provide stock tips, buy or sell recommendations, or personal financial advice. Stock market investing involves risk. Please do your own research and consult a SEBI registered financial advisor before making any investment decision. Now let's begin today's topic, structure of the Indian stock market. In our previous videos, we learned what the stock market is, how it started, and how the primary and secondary market works. Today, we are going to understand how the Indian stock market is organized. Many beginners think that when they buy a share, is directly reaches the company. But that's not how it works. These are different organizations working together to make the stock market safe and smooth. Let's understand this with a simple example. Imagine a cricket match. Think of the Indian stock market like a cricket match. A cricket match cannot happen with only players. We also need an umpire, a stadium, a scoreboard, and the players. Similarly, the stock market also has different people and organizations. Let's learn about the five important pillars of the Indian stock market. SEBI, the referee of the stock market. The first and most important pillar is the SEBI. SEBI stands for Securities and Exchange Board of India. Think of SEBI as the umpire or referee in a cricket match. The umpire makes sure every player follows the rules. In the same way, SEBI makes sure everyone in the stock market follows the rules. It prevents frauds, stops unfair practices, protects investors, and takes action against companies or brokers who break the law. Because of SEBI, investors can participate in the market with greater confidence. Second pillar is the stock exchange. Think of it as the cricket stadium where the match is played. In India, we have two major stock exchanges. The first is BSE, Bombay Stock Exchange. It is the oldest stock exchange in Asia. Its main index is called the Sensex. The second is NSE, National Stock Exchange. Its main index is called the Nifty 50. Whenever you buy or sell shares, the transaction takes place through these exchanges. Now imagine you buy gold jewelry. Where do you keep it? Most people keep it in bank locker because it is safe. Similarly, after you buy shares, they are stored safely in digital locker called a depositories. In India, there are two major depositories, NSDL and CDSL. Your shares are stored safely here in electronic form. Even if your stockbroker faces financial problems, your shares remain safe because they are kept in the depository, not with the broker. Think of it like keeping your money in a bank instead of carrying cash everywhere. Stockbrokers, the middleman. Can you directly walk into the NSE or BSE and buy shares? The answer is no. You need a registered stockbroker. A stockbroker acts as a bridge between you and the stock exchange. Some popular brokers are Zerodha, Grove, Angel One, ICICI Direct, and HDFC Securities. The broker gives you two important accounts: a trading account, which is used to buy and sell shares, and Demat account, where your shares are stored electronically. Without a broker, you cannot trade in the stock market. Market participants, the players. Now let's talk about the people who actually participate in the market. The first group is retail investors. These are ordinary people like you and me who invest our own money. The second group is domestic institutional investors, also called DIIs. This include Indian mutual funds and insurance companies. The third group is foreign institutional investors, also called FIIs. These are investors from other countries who invest in Indian companies. The fourth group is promoters. Promoters are the founders or original owners of the company. For example, the Tata family or Mukesh and Ambani in Reliance. Together, all these participants makes the stock market active every day. Let's make it simple. SEBI is equal to referee, NSE and BSE is equal to stadium, NSDL and CDSL is equal to digital locker, stockbroker equals middleman, investor equals player. If you remember these 5 points, you easily understand the structure of Indian stock market. The Indian stock market is designed with different organizations working together. SEBI protects investors, stock exchanges provide the trading platform, depositories safe store your shares, stockbrokers help you buy and sell, and investors keep the market active. Together, these five pillars make the Indian stock market secure, transparent, and efficient. In our next video, we will continue learning another important topic in our stock market course. If you found this video useful, please like, share, and subscribe to our channel. Thank you for watching. See you in the next class.